Hi, Richard Martin. Thursday the 19th of August. The market forecast a short-term update, and we're looking at a weekly chart of the ASX 200, or in fact the share price index, the futures. I can see the sloping head and shoulders pattern that's still underway, forming. There's no reason to suggest that anything should change here. This is the GFC fall and the retracement up, and now the end of wave 2 and pushing down to where, well, let's wait and see, but the target is certainly down in that 3700 mark. On the daily chart, you can see that the daily bar is actually bearish and threatening on the MACD to cross below the zero line, which would be a short entry anyway. We are short this trade. Stop loss is quite high at the moment, but we hope to be able to reduce that to bring it down to just above this mark at about the 44.97 point as soon as this confirms that it's on its way down to reach our first target, which was actually hit back in the first leg down, but happy to hit that again in the event that it gives us that opportunity. On the Dow Jones, this is the daily chart showing these very high upper tails, indecision in the market, classic reversal signs when they do occur, and it looks like that it's threatening to break down on an increased volume here, which is pushed up over the last week of trading as this correction has unfolded. Still tracking below the 200 moving average, so all on track here to hit its first target, and I've just left this Fibonacci extension here where you see that it's just under 10,000. So I would say that 10,000 or just above is really our first target in the event that this continues to fall down. The Australian dollar also tracking the share price index, just resting on the 200 moving average here. 87.20 is this long-term target coming up from early June. It's likely that if this breaks, it'll break very quickly down to 87.20, which would be the target. In fact, I say 87.20, but that looks like it's 88.20. So would need to check that on a shorter term time frame. But either way, 88.20 to 87.20 would be the targets here. Euro, similar pattern. The Aussie and the Euro tracking together, and indeed the US dollar doing directly the opposite to this. So the US dollar is tracking up as this is coming down. You can see this very bearish break of the relative strength index, and it's pushing down quite strongly now. So we'd expect this to fall further. Target, I'd say, is the 21.27 mark on the 200 moving average just for this point. Here's gold, and this is a daily chart. This is unfolded. Here's where we exit out of position at 1190. It's been tracking above this trend line and effectively is the upper end of its resistance now. Currently trading at $1,229. Has been as high as $1,230. This resistance point here is $1,233, and the reason for that resistance can be seen through the Fibonacci retracement from the record high to this low, and in fact the number we want is not on it, but there it sits just above the 61.8 retracement at about $12.33. Last chart is just to show you where oil's at, which is broken through this wave 2 type channel, this upward sloping channel. MACD is particularly bearish. It's come back up and retested the bottom of the channel, which was prior to support here, now resistance, and it will track the major indices. So in the event that the S&P 500 breaks down, then this should push down lower as well, of course with a $64 odd target as being the May 2010 low. And if we went to a weekly chart, you can see the really severe drop after this massive rise. What a fantastic trade that would have been, and it should track down in the event that extreme weakness occurs below the 64 mark, with next support at about the $58 mark. Alright, well that's it for the short-term update. Please go to themarketforecaster.com.au. A lot of detail there as far as gold and gold stocks, individual opportunities that are still trading, still in the money, as well as industry sectors of energy, finance, materials and industrials. Individual stocks are checked out within those sectors there. So we look forward to the next update, which will happen early next week.